Good evening, everybody. Okay, tonight we're going to concentrate a little bit on when to take profits. Now, there's obviously where you want to look for sell signals, but as you can see, the Dow is off 137 points today, and the NASDAQ, after being up 15 or 20, finally came back. Now, is that anything crucial? Let me see if I can make this small enough. There's a couple things that would have forewarned or at least had us prepared to start taking profits. We're right at kind of that resistance level. And the most important factor that knowing that we should be looking for signals, but what usually happens in human nature is kind of demonstrated by where are we with the stochastics and how far away are we from the T-line. Now, up until today, there wasn't anything that really showed any real selling going on. But the only thing that we had as a warning was the magnitude of distance between the T-line and where everything was trading. So that is the reason why we were saying be a little bit diligent today, because things have been going up. Things don't always go straight up. There's usually some point where people start taking want to start taking profits. So what I'm going to do tonight is go through the aspects of when to take profits, but let's go through some of the stocks that we're already involved with. Now, obviously, we've got people that are here tonight that are non-members, which is fine. So we're going to kind of be looking at positions that we have already recommended and why. And the reason for that is we're recommending what we would consider to be the best stock trades. So that's why they keep coming up as far as our evaluation. For today's video, how far away from the T-line can one consider a reversal? Nothing more, I want to say, specific than just seeing that you're in the overbought area and the distance between the T-line and the trading is getting a little bit more extensive than what it normally is. So there's not anything more scientific than that, Ron. It's just being able to say, all right, we're in an uptrend. It's been moving up. The stochastics in the overbought area, and we're starting to move away from the T-line. That should be just kind of a caution flag. Let's go through what we've been looking at. This one is probably going to be recommended tomorrow because of the J-hook or the fry pan bottom pattern. And you can see the fact that even though the markets were off, this is why we want to stress so much utilizing the patterns, because a pattern's a development of investor sentiment over a period of time. So as we saw, the Dow and the NASDAQ were down, and the fry pan bottom is still working. Now I'm going to go through some of these pretty quick. These are stocks that we've already recommended based upon the signals and patterns that have got us into these positions in the first place. Why we got there, why we held on, and when we should look to be taking profits. So look at where the buy was. Kind of a scoop pattern, best friend breakout. Came up here, did our bobble breakout, which is a more defined J-hook pattern. And now look where we are compared to the T-line. What's this tell us up here? Well, obviously, we've got good profits in this, pretty much a 50% profit. And now we're getting what human nature usually indicates is happening, that things are getting a little bit too steamy up here. So what's our criteria? We want to start watching for any sell signals or profit taking. Where's our first place that we'd probably want to see that the sellers are taking control? Probably the halfway point of this candle. No chart yet? No, Sam, yeah. Read Jim's explanation of how to get your screen sharing up. All right, so that's DLNI, getting ready to take profits. SFIX, ever since it started the next move up, has been a nice steady eddy. And we stay long as that stays above the T line. Why does this not come up? Oh, man. All right, we'll go pretty straight past it. Reggie. Yeah. Typing this. Reggie, we can see what's happening here. We had the fry pan bottom breakout. Now we started seeing some profit taking. But what's our next pattern set up? Our J-hook pattern. So what do we do with this one? Well, if we stayed long, you continue to stay long. You just don't want to see it trade back below the T9. At this point, your safety stop should probably be just below today's low. Logic says if it comes down through there, that this J-hook pattern's not in progress, they're still selling it off. We recommended cons because of the J-hook pattern also. And notice what the criteria, just a very simple criteria on a fry pan bottom type pattern, is you just stay long as they can't close it below the T-line. Retta, another fry pan bottom J-hook type pattern, and look where we're trading right now. Right there, right above the breakout level. Notice when it came up and pulled back, it was very indecisive, and the one criteria that they couldn't, or this chart couldn't do, was close below the T-line. Now, for you, some of you new folks in here tonight, the T-line is the 8 exponential moving average. The blue line is the 50 simple moving average. There should be a red line on here somewhere, which is the 200-day simple moving average. And those two moving averages are on our charts not because we use them to make our decisions. We use them to see what type of signals are occurring where everybody else is making their decisions, that we can see exactly whether those moving averages are acting as support and resistance. So here's VICR. Now, we recommended this one today based upon a potential J-hook pattern. But notice what it did after trading positive today. Closed more than halfway down the candle that told us the bulls were in control. It actually closed right on the 3T line, which is the 3 exponential moving average. Another high probability trade setup support and resistance level. And let me go back to the T-line. The T-line, the 8 exponential moving average. The reason we call it the T-line is it's the trigger line. Very simple. If you see a candlestick buy signal to close above the T-line, you can stay long until you see a candlestick sell signal and a close back below the T-line. With the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So what that boils down to is where the 50 and the 200 act like magnets because everybody's watching them and they're not making any decisions until they get to that support or resistance level, nobody has the T-line on their charts. And it works extremely effectively, which means if the candlestick signals are the graphic depiction of what's going on in human nature, and the T-line acts like a natural support and resistance level of human nature, when you combine those two, you've got an extremely high probability trade combination that will keep you in positions and get you out of positions at the appropriate time. So VICR should have traded positive today. And this is the process of the old adage you hear everybody tell you, cut your losses short and let your profits run, but they never tell you how you cut your profits or your losses short and let your profits run. Candlestick signals make it very simple. This is supposed to be doing something, and it does the opposite, meaning doesn't confirm. You close out the losing trade very quickly and move on to something else. OCLU is another kind of a bobble breakout. This one can still be bought aggressively if it comes up through these levels. As you can see how it came up, failed at the 50. They couldn't close it below the T-line. You had kind of a T-line crunch. Now if they start trading this positive, that tells you this bobble breakout is in progress. On the other side, on things like Bike, there was your big bearish belt hold signal. This confirmed that it was time to go short because this is a very bearish signal. And how long do you stay short? Until you see a buy signal and a close back up above the T-line. When do we start looking for that short cover to cover? More than likely when the stochastics get into the oversold area. So that was kind of the same scenario where we had a bearish kicker signal in box, BOX, but today it didn't confirm, because it opened positive and traded positive after the kicker signal. Kicker signals where they opened it here and closed it up here. The next day they gapped it down below the open and went the opposite direction, telling you the investor sentiment was dramatically kicked in the opposite direction. That's a very powerful sell signal. Now, it didn't confirm today, but if it starts coming back down through this level, that tells us the bears are in control. You can start shorting it. We did the same thing on Smuckers, where we had the bearish reversal. We covered the short position right in here because look how far away we are from the T-line, and it bounced up a little bit. When it came back down through here, we could get ready to go short because now what would we have? Now we have a bearish J-hook pattern, telling us, especially if this opens lower tomorrow, that you've got wave 1, wave 2, wave 3 being the same magnitude as wave 1. So all of this is just being able to identify what normally happens in human nature and just taking advantage of it. This PSRO, we've been long on this one because this is what we call kind of a cradle pattern. Notice how once they had a big down day, and this all goes back to the very basic reaction of human nature. Where do most people sell? They panic sell at the bottom. What do you start looking for when you see that gap down in the oversold area? You start looking for buy signals. In this case, sideways for a couple weeks with dojis, indecision. Then they told us what their decision was. And when they broke through the T-line, what type of signal did we have? There's our bullish doji sandwich. Very simple. Big day, a doji. And our simple rule of the doji is it's going to move in the direction of how they open it after a doji, which means when they started trading positive, we already knew that more than likely the magnitude of this candle and this candle were going to be the same, which told us we're in an uptrend. We're above the T-line. How long do we stay in this? As long as we don't see a sell signal and a close back below the T-line. Hydra is another one that we've been watching because of the bobble breakout. Right now, if you're long, you just stay long. Notice how when it backed off today, it didn't get below the T-line, and it closed back up above the 3T line. V-Ray, we recommend it today because of the fry pan bottom. Now, it traded positive and closed lower. It didn't negate our buy signal. Again, we had an inverted hammer, doji, gravestone doji. bullish confirmation. You can see the fry pan bottom trajectory. Even though it traded lower today, it still traded above the 3T line, and it stayed above the halfway point of this candle. Very simple logic from the Japanese rice traders. If this was the candle that told us the bulls were in control, if the bears could close it more than halfway down that candle, the bears are still in control. You get back out of that trade, or that trade didn't work. So this one, it's still, if you went long, you stay long. If you're thinking of going long, you can still be buying this one on strength, because that would still confirm the fry pan bottom trajectory. Riot was one that we were looking at. It opened positive the other day, but here's another. We'll do a session on entry here as soon as the weather gets a little bit cooler. But this is very simple. If it opens positive, again, what's it telling us about kind of a doji type day right on the 50? That it's probably going to move positive. But I use the word probably. If you see it open up and immediately start selling off, what should be your first instinct or your first reaction? Well, they're not buying right now. They're selling off for some reason. So what's the best criteria, best strategy at this point? Well, if it's selling off, you just wait for it to come back up through the open, because that tells you the profit taking's over and the bulls are back in control. That becomes a good entry point. Now we're seeing what we call the bobble. Came up to the 50, it's pulled back, it used the T-line as support. If it comes back up through the 50, now we've got that bobble breakout. You can be buying at that point with a high degree of probability that it's going to move higher. Kind of the same scenario today in lumber liquidators. Here was the candle that told us the bulls had taken control after this breakout of a series of dojis. Remember, if one doji means indecision, a series of dojis means greater indecision. When you see that flat trading, this is your headboard, this is your bed, and this is your footboard. That usually indicates there's going to be a reversal. The cradle pattern hung down between two trends. However, the positive trading today closed back below the halfway point of this candle and right here at the T-line. So the strategy should have been you should have closed it out. But if you didn't close it out because it was still trading right above the T-line, the criteria becomes it has to open positive and trade positive to stay in it. If it opens lower, what's happened to our cradle pattern? It's disappeared. The 34 EMA just seems to work well, Marianne. It just seems to have a lot, for some reason, a decent support and resistance following. So, and that's the nice thing about candlestick charts. There's our 200. Is you can put anything you want on here. Now, as you can see, my charts are fairly plain. So if I put on, if somebody says, oh, try the 23 EMA, well, you can put it on. If you find that it's not doing anything for you, you can take it off. The main criteria for the high probabilities of candlesticks is the signals themselves, the patterns themselves, because those have been not verified, but confirmed over the last 400 years by the Japanese rice traders as signals and patterns that reoccur in human nature. Let's see, that was lumber liquidators. Splunk. This is a very simple pattern. We can see how it broke out with your best friend. We're in a 45 degree at this point. And what is a 45 degree? It's just kind of a steady uptrend as long as it stays above the T-line. Now, in this case, where it's a good distance away from the T-line, If it started selling off, you take your profits, but then you just see what happens once it gets down to the T-line to see if it's going to support at that level. Again, the further you move away from the T-line, the higher the probability it's going to come back and test it. So here's a case where YEX had a good J-hook pattern breakout, nice steady move, but notice where the doji was occurring, a good distance away from the T-line. So what's our very simple rule of a doji? It's going to move in the direction how they open after a doji. So if they're opening it lower after a doji in the overbought area, that far away from the T-line, where do you think your first likely target's going to be? Back here. It's time to take profits. If you think it's going to open and continue higher, you put your safety stop just one tick below the low of the low of the doji, because logic says if it comes down through there, they're selling it. Do you buy when you see a buy signal even before the close above the T-line, or do you wait for it to close above? If I am this close to the T-line, I'll wait for it to close above the T-line and confirm. But the same scenario is when you move too far away from the T-line, it's going to come back and test it. I don't know if this is if you're too far away from the T-line here and you start seeing a buy signal, at least you know your first target is going to be coming up to test the T-line. So if I'm a good distance away below the T-line and I see a buy signal, I'm going to buy it, because then I can watch to see what it does once it gets back up to the T-line. But the probabilities improve dramatically once you close above the T-line. I'll see if I can find something that more clearly illustrates that. So here's our perfect, not perfect, but here's our best friend signal. Here's our J-hook pattern. So if you were taking profits here, you could be buying back here. Why would you want to be taking profits here? Because you started seeing selling that might bring you back to the T-line. So at this point, even at this point, you don't know whether they're going to bring you back all the way down here. But once you start seeing that they aren't closing below the T-line, I have no qualms about closing the position out here and buying back here. At least when I'm buying back here, I know that the probabilities are that it's going to head up higher. Usually I will wait until the next day, because if I'm buying right here, I would rather pay up a little bit more knowing that the probabilities have dramatically improved, that it's confirming my signal, than buying here and then the next day it opens here and trades down. I'd rather make less money but with higher probabilities of being in the right trade at the right time, because if I can dramatically improve my correct trade ratio, the compounding effect will be much, much greater than trying to buy at the absolute bottom and selling at the absolute top, or holding on to something, waiting to see if it's going to do a candlestick continuation pattern. Was your only sell signal the distance above the T-line in the overbought area? Up here, yeah, I might have been just taking profits with the idea that if it's going to come back to the T-line, I could always buy back. Try to have confirmation of move. Yes. So now this is also a function too of if this is starting to sell off, say I'm buying here and I'm up here and it's starting to sell off and the markets look like they're getting soggy, take profits and then see what happens here. If it supports, I can always buy back. If this is a 10-point move and I only get 8 of those, but when I'm in there for those 8, that I know the probabilities are in my favor, that's going to dramatically improve your compounding effect. So on something like this is where you kind of observe the obvious, which is somewhere right in this area, they were selling before. They brought it back up. We had a shooting star, a doji, a selling. When it opened lower today, what was it telling us? It was telling us they were taking it back down. They weren't going up through this level. it was time to come back out of this position if you'd gotten back in over here. And with the fact that they sold it, kind of a little gapped it down and closed below the T line, what if it all happens too fast? By the time I get into the position, it seems to start falling right away. Or how do you know if it's swing trade or intraday trade? Oh, hold on. I thought they weren't supposed to solicit after 8 o'clock at night. What happens if it does too fast? Nothing you can do about it. If I see that it opens and I'm getting ready to sell it and it's already down here, well, it's telling me get out of the trade. So sometimes I can get out here, but if they hit it and then bam, went right down here, it's still telling me I should be out of that trade. Do you look at weekly to have wider view to see where you are versus the T line? Because sometimes you will be below the T line on a weekly and above on the daily, depending on your time frame that you're trading. If you're a longer term trader, obviously you're going to use more of the weekly. If you're a swing trader like me, where I might only be in a position for 2 to 10 trading days, I'm going to use the daily. Now, if I've got 2 daily charts that look good, I can always flip over to the weekly chart to see which ones look better on the weekly chart. So HMI was one. It's still above the T line, but you can see there's not any real rambunctious buying going on. So today I would have closed this one out because the markets were soggy and it was closing just below the T line. It wasn't a good looking chart anymore. Where could I be buying it back? Well, I can be watching what everybody else is watching. Notice there's a little wedge formation. But if they start trading it positive and break up through this level, I can buy it back. But right now it's telling me investor sentiment is getting soggy. I want to be out of it. ANTH. Now, some of these have not worked, meaning when we put on a trade or when we recommend or when anybody buys using candlestick signals, more than likely 1/3 of every trade you're going to do is not going to work. Now, when you know that statistic, that takes the ego, emotional part of your trading out of the picture. So if I was buying this on positive trading, and let's say it was trading up and it closed here, I'm closing out the trade. Or if I held on to it, saying, all right, I'm going to see if it's going to hold here at the T line, what should I have seen today to tell me to stay in this? Should have seen it open positive, telling me the T line was acting as support. When it was trading lower, probably time to close out that trade because it just doesn't have a good chart pattern. Now, does that mean if it does a big bullish engulfing signal tomorrow, we can't get back in it? Yeah, we can get back in it. So there'll be a lot of times where I'll put on a trade and I'll lose 4%. Put on the trade again a second time and lose another 3%. But the reason we were putting on that trade in the first place is because it had some sort of pattern in the oversold area telling us that was where the buyers are coming in. It might take 2 or 3 times for them to get started. So 4% loss, 3% loss, buy it again. Hopefully now you got a 28% gain or you net 21% on the trade. Let's see, GLNG. Some of these were working well, but very simply, now what type of signal do we have up here in the overbought area? An evening star signal. That told me if I was long, even though it closed right here on the T line, I've got an evening star signal in the overbought condition close out the position, because even if this holds up and trades back up, it's still kind of an iffy chart at that point. I'd rather go find something that has the probabilities that look more like this. So what we're trying to constantly do is move out of situations. This one worked great. There was a kicker signal on VSI. Now look what happened up here. Hanging Man, Doji, Shooting Star Doji. Open lower. Where do you think they were going to come back to? Back to the T-line. The fact that they brought it down, what did that do to our trajectory? Well, it started showing us the bears were starting to take control. Should have been taking profits up here. And this is why when you start seeing, especially in the overbought area, start seeing weakness, you're going to be much more prepared to get ready to close out a trade on this very simple confirmation where you don't have to wait and see whether it's going to come down and go back up. You close out the position. Then you can always come back and reevaluate that trade later on. This one, I have no idea why this one won't come up on this chart. So we'll skip right on to the next one. Momo, same scenario. There's your Hanging Man. There's your Doji. Where was a logical place to put a stop today? It shouldn't come back down through the low of this candle, because if it does, if it did, where do you think it was going to? Back down to the T-line. So again, this is all just kind of visual confirmation, what happens normally in human nature. Now we had a couple that were big movers that were trading wildly, like AFMD. When it started coming, when it traded up the other day and came back down through the open, that was the time to start taking profits and get out of the trade. Doji rule worked well today to get out of trades in time. Yes, and I'm going to show you some more as we get to the biggies. And Crone. Crone was one that after it gapped down the other day, gapped back up, but then look where it opened today, back at the lower end and started trading off. So you pick a spot that tells you, hey, I don't want to be in it anymore, which would have logically been kind of at the low of today, or of yesterday. John, you'll see some here in a minute. Okay, so here's what was happening in the biggies today. This is why moving too far away from the T-line is important to watch. Apple, you can see, had a nice little J-hook pattern, big day yesterday, and then during the day, it was up here. Now, where was this in the overall trend? Obviously, way up in the overbought condition. So, if it's trading way up here, where are you relative to the T-line? You're a good fur piece away. So what's the simple strategy? You flip to your 10-minute chart. So everything's happy, everything's happy, everything's happy, then whoops, we're starting to see a little bit of indecision up here in the overbought area. A little bit of a distance away on the 10-minute chart T-line. So where's the time to start looking to take profits? Well, they took it back up, but then they brought it back down. So the 10-minute chart is saying, all right, I've got a bunch of sell signals. I've got stochastics in the overbought area, and they're starting to sell this off. Where's the first likely target? Back here to the T-line. Now, if I want to trade a little bit quicker, what do we do from here? You just flip down to the 5-minute chart. The 5-minute chart says, oops, I got a bearish engulfing signal below the T-line, which is also making my 10-minute chart look weak. And the daily chart is trading way up here, way far away from the T-line. It's time to take some off the table. Same scenario on Amazon. Amazon was up 50 some odd points yesterday, and then it was up some more today. Same scenario. Look how far away you are from the T-line. Now, does that mean the uptrend of Amazon might be over? Definitely not. It's just telling you there's probably going to be some bobbing and weaving in here. But if you were up here, especially if you're an option trader, and you started seeing this happen, knowing that you're way up away from the T-line on the daily chart, this is where you start taking profits. Notice what it did over here. Started pulling back a little bit, but did a morning star signal right on the T-line, took it back up. What happened up here? Right about the same level they were selling before, they're selling again, so they're not going to new highs. When they started bringing it back down here, I told you up there's some selling. Let's take some profits. What's the worst case scenario? They bring it back down here and start bringing it back up. Especially if you're an option trader and you've got some big profits over the last few days, simple strategy is close out those big profit options that you have. Now look at something that might be less expensive or maybe the next level up so that you're not as much exposed. So you get out at 11:30. Not any particular time frame. Oh, it just happened to be, right around 11:30. They started selling it off. What is your definition of points, pennies, or price? If you kept Amazon today, where would you place your stop for tomorrow? What's the simple rule of doji? If they open it lower, they're probably going to be moving in lower direction. So I'd have a safety stop right here at today's low. If it comes down through there, where's your next logical target? Right back down here to the T-line. All right, Jim, did I answer your question well enough? Yeah, the time doesn't really matter. It was when did this could have occurred here, or could have occurred over here. It's just seeing where the selling has started. All right, so Netflix, same scenario on the 10-minute chart, which told us they had taken it up through the 50, but brought it back. Not a real severe case, but they're fighting to get through the 50. And you're getting up here in the overbought area. So if you were long Netflix, you would have stayed long. However, tomorrow I wouldn't want to see it trade back below the 50 because that would tell me this is all selling occurring. And we saw some of that. Was that it? No. Oh. This might have been based upon, look what happened at kind of this resistance level. That's where they started selling Momo today. NVIDIA, another one that was trading up, and there was also a little resistance level. Well, bam. How do I do that? Try not to make the same mistake 7 times. I forget whether there's some sort of resistance level. That wasn't it. There's something that was right about in here that it came up and came back. But notice again what you have today in NVIDIA. When it broke through this level, you've got a shooting star doji. So and you're up in the overbought area. So what should be your strategy at this point? You put your safety stop just below today's low. If it comes in that direction, where do you think it's heading back to? The T-line. Labu, still moving up nicely. So that you may not want to trade Labu but at least you know the biotechs are looking good. So you look to see which biotech stocks are looking well or looking good. Nugget telling you the gold stocks aren't going to be doing very well. Notice your bearish engulfing signal right here at the T-line. So what's that tell you? You could be a wave 1, wave 2, wave 3. So I'd be watching this if I was shorting it for this little trend. If it breaches that, then the next one would be if it breaches the low, because if it breaches this level, then you've got your wave 1, wave 2, wave 3 with a lot more downside. Do you set your chart for daily over a 1-year period or have longer, shorter time frame? My time frame isn't that relevant. What I want to see is going on here. So depending on how big I want to make it, has nothing to do with this time frame. I want to be able to easily see what's going on here. Now, if I see something that might have some relevance, is this a major support level? Yeah, I might click back and see if anything else has happened at that level. I hate when I do that. In this case, nothing. But on others, it might be that there was a bottom down here and came back up. So I at least know that's what everybody else might be watching. So the time frame doesn't really matter. I'll show you here in a second. Tesla, you can see what's happened here. There's the support level. Notice when it bounced back up. This was not a reversal signal. It acted kind of a belt hold signal, but notice your stochastics weren't in the oversold area. So what can you imply from this if it's not a reversal signal? That you might at least have a bounce. Notice where it bounced, right up to the T-line before it started fading back off. Now I got maybe traded it on any time frame, liquid also options, yes. Yeah, so if it's not a reversal signal, you can kind of imply that there might be a bounce. If it's a bounce, you just be a little bit more diligent watching to see what happens at the T-line as the first target. So again, all this is based upon human nature graphics. We shorted Chipotle because look at everything that was happening here. There was your best friend, bearish best friend, doji gap down in an oversold area. Then look what happened over the last couple of days. Here's your bearish doji sandwich. And what do we expect from a bearish doji sandwich? More downside. Now we had another doji. So if it opens lower tomorrow, what can we expect? Maybe a second doji sandwich. And if this down day is the same magnitude as this, that means they could almost take it right down to the 50-day moving average. Do we have to use a 3 PT line? What are some rules to use it? What advantage it does? The 3T line is more effective when you start moving too far away from the T line. Then the 3T line kicks in at that point. And also, the 3T line can be used as an added little confirmation that if the 3T line comes back down through the T line, that's more confirmation that there's been a definite change of investor sentiment. But that's also going to be confirmed initially by the signal itself. Since July 9th and August 10th, all indices are in an uptrend. Is it time for a downtrend? I can't tell you that, Igor. All I can tell you is right now we've got the potential of a pullback. But we've had a pullback where it came down, pulled back to the T-line. Came back up, might just be pulling back down to the T-line. So I'm not trying to project what the market could do. I'm more interested in analyzing what the market is doing with a much higher degree of probability. So I know right now we've got an uptrend. We're staying above the T-line. But what's our simple rule of a trend? It's still in an uptrend as long as it doesn't close below the T-line. So if tomorrow they close it down here, Now I know there's been a change of investor sentiment. I'm going to start watching to see if this is the next support level or if this is the next support level. Kind of an evening star signal, yes. An evening star signal can be an up day with 1 or 2 indecisive days. And then this candle should actually close, I can make this bigger, close below the halfway point of this candle. And it didn't look like it quite got there. But if it trades lower tomorrow, it's confirming. What are the EMAs? What are your EMAs? The T-line is the 8 exponential moving average. The 3T line is the 3 exponential moving average. And the 34 is the 34 exponential moving average. The 50 and the 200 are the 50s, the simple moving averages. And everybody says, well, why do you use simple? Why don't you use exponential? We're not using them. We're just watching what everybody else uses and see what happens at those levels. So you can project where the market can go to by using shorter time frames. Yes, all you're really doing is adding up the factor that we're in an uptrend right now until we see a sell signal and a close below the T-line. When that happens, now we can start projecting where there might be the next support level. But as of right now, we're toppy, but we don't know whether the trend has changed or whether this was just profit taking. Do you buy if it's already above the T-line for a few days but not in the overbought yet? Or do you buy only as it goes above the T-line, not a few days later? Usually I'm going to be buying based upon the first time that it comes up through the T-line on a buy signal. I want to see it confirm the next day. Okay, let's see. Where are we? Okay, so using that information, again, we were looking at, we've put spreads on Chipotle because we can see what type of signal it's been creating. The best friend gap down, your bearish best friend, your bearish doji sandwich. So whether you're trading stocks, commodities, currencies, you've got a high probability of, notice when they came back up, this is lean hogs. We've been short lean hogs for a few days because there's your dark cloud. There's your bearish doji sandwich. What that tells us about the 50. But they failed the 50. They're coming back down. This was not a reversal. This was just an up day and a downtrend, which told us there could be a bounce. We went long on this day. It went up the limit. It opened up and immediately started selling off, so we re-shorted it. And then it closed below the T-line, closed below the halfway point of this candle. And today, we added more shorts because look what type of signal it was setting up. Let me get rid of this. Here's your doji. And if it opens lower today, what was it had the possibility of creating? A bearish doji sandwich, which meant this candle right here was going to be somewhat the same magnitude as that candle right there. Do you use debit or credit spreads? It all depends on how far we have to expiration. We do our training sessions on spreads, and we'll be doing a lot more of that during the September-October time frame. But if I'm doing a fairly short-term spread, let's say I was planning on adding a spread, thinking it was going here, I might do a look at just pick out a spread because I know where my target is. Now, I'm going to do it on a fairly short basis, like with weeks of expiration. If I'm getting near 1 week of expiration, I might do a credit spread because they won't make as much money, but they will give you a much higher probability of making monies. So anyways, let's see, where was I? Back here to, so we shorted this one, and what was the prospects of it heading lower? Well, you can see what the overall trend has been here. Every time it's come up to the 50, it's failed. It's still going lower. Same scenario on our short recommendation for soybeans. When it came up to the 50, notice what happened here. Left-right combo, a bearish doji sandwich, failed the 50. We're staying short, and what's our criteria? We stay short until we see a buy signal and a close back up above the T-line. Again, this is not rocket science. This is just putting the probabilities in your favor. Now, here's a few that came up in the chat room. There's your big bullish engulfing signal off the 50, fry pan bottom, doji sandwich. More than likely, there's more upside on this one, WMGI. Now, one of the benefits of our chat room is because everybody's looking for the same signals and patterns, they're going to find things very quickly. And somebody might say, look at Zynga. It looks like it's confirming. Notice what it did. This is what we call the bobble. Came up, failed at the 50, pulled back to the T-line, /200. When it came back up, what do we have? A J-hook pattern that's much more defined as where they were selling it and where they were buying it again. So what do we expect coming out of a J-hook? That if this is wave 1, wave 3 should bring you back up testing these recent highs. A left-right combo is a doji followed by a bullish engulfing signal. It's one of your high probability reversal signals. And when we do our quantitative training, there's about 14 different setups that, we did that one, that give you high probabilities. And anytime you see a doji involved in one of those signals or combinations, it's probably going to work more effectively than. So if you had seen a bearish or a bullish doji harami, that's more powerful than just seeing a bullish harami. C-Bay, you can see the T-line crunch J-hook pattern as they came back up through the 50, implying that there's still a lot of buying pressure taking this one higher. Uh-oh. So here's the obvious. Nice strong up move, pull back. What do we got setting up? A J-hook pattern. So even if you've missed this one, notice how this one is kind of a scoop pattern breakout. That's one of the candlestick patterns that have high probabilities. The scoop pattern with a slingshot effect. And then once that's going, notice what's happened. They pulled right back to the T-line. Again, there's your little left-right combo, which is a strong indication there's more upside. And if there's more upside, what do we got? A J-hook pattern. So what's the magnitude of this move potential? The same as wave 1. So now, if I look at this, and this was a 17-point move, I can calculate pretty much where my next upside target is. And or if I know this is a high probability uptrend, I can put on different option strategies to maximize my profitability, which might be just buying calls outright for the next 3 weeks, or maybe doing a call spread, bullish call spread, where I get a lot of leverage for 2 weeks out. The WMGI on daily chart, it looks bullish. However, using the 5-minute and 10-minute shows bearish. Which one do you trade? Remember what candlestick signals are. They are the accumulative knowledge of everybody buying and selling during a specific time frame. So when this closed here, what becomes the predominant analysis? The daily. What happens to your intraday charts? They're null and void. because when's the next buying going to be occurring? Tomorrow. And the investor sentiment might be completely different. So the intraday trading ends when the stock closes. Now our analysis is, what is the daily chart telling us? EVBG, I don't know what the volume is on it, but that's one thing you have to look at when you're doing options, is to make sure there's enough volume in that stock to have enough volume in the options. KLXI. This one is to illustrate. Notice the fry pan bottom. What do we expect coming out of a fry pan bottom? Strong price move. It's not unusual to see a lot of whipsawing right here at the fry pan bottom, but if they break out to the upside, that tells you this whipsawing was a lot of indecision. Now they've made their decision. What do we expect coming out of a fry pan bottom? That strong price move. Okay, so if they've traded 258,000 shares, which one was that on? That's pretty much telling you, yeah, it's a good stock trade, but the options might be pretty tough getting in and out of. So the lower the volume of the stock, usually the lower the volume of the options, to the point where you definitely have to put your bid or ask in between the bid and ask. And now you're more at the mercy of the market maker than you are of other people buying and selling. Here's MCF. Very simple. Wave 1, wave 2, going into wave 3. Your J-hook pattern. And notice where you are. You're right about this breakout level. So wave 3 could take you up into the $8 area. You consider a candle signal as a signal only when it's in the oversold buy area, or even if the stochastic's in the middle, but it's on the T-line and support. A candlestick formation is a signal when it occurs in the right condition of the market. Obviously, a candlestick buy signal in the overbought area doesn't mean very much. You're looking for candlestick buy signals in the oversold area. Let me see if I can. A candlestick sell signal in the oversold area doesn't mean very much. Whoops, this isn't a good illustration. This is more of an illustration that kind of had a breakout area in your best friend. That implies there's probably going to be a 45 degree. Now, you will have situations where, in this case, where you have the buy signal and your stochastics are up here, but remember, the best friend, and the reason we call it your best friend is because they occur often enough to make it a very profitable trade to look for, and the probabilities are not only will you be in an uptrend, but you'll be in a very strong uptrend. So the candlestick signals you'd like to see occurring when the stochastics are in the oversold area. A pattern breakout is usually going to occur when your stochastics are already in the overbought area. So this one has just broken out, which was kind of the same scenario as this one. Notice where this one broke out. Right here. And there's your fry pan bottom. So it gapped up big time. So the question is, what should we do here? Makes it very simple. When you the best friend is when you see a doji gap up or a doji gap down. The doji is what instigates your best friend signal. So what's our simple rule of a doji up here? It's going to move in the direction of how they open after a doji. So what do we imply after they've broken out of a fry pan bottom? A big price move, so you kind of expect a 45 degree from here. So everything that we're looking at has high probability results because that's what the Japanese rice traders have illustrated for us for hundreds of years. All we're trying to do is learn what those results are. Again, there's your fry pan bottom breakout. Big, long-legged doji indecision. But if they open up positive, the probabilities are pretty strong. They're going to continue to take it positive. Yes, it doesn't matter why that price move. as you're showing us, MTC was based on earnings. Remember, there's times when some companies come out with fantastic earnings and the stock sells off immediately. What's that tell us? That told us that the earnings weren't as good or as fantastic as what everybody was hoping for. On the other hand, somebody pointed out the other day that somebody reported negative earnings and it skyrocketed, which meant their negative earnings weren't nearly as bad as what everybody thought they were going to be. So here's kind of your best friend, a little doji, gap up kicker type signal, wave 1, wave 2. You can see how it broke out through this little downtrending channel going into wave 3. What is your buy point? RP, you're going to have to tell me what stock you were looking at. If you were in GKOS, would you have sold it when the gap up candle traded back more than halfway down? GKOS. No. If I was in it, I would just let it play out, see what it was going to do. But I knew what my strategy needed to be for the next day. It needed to open positive and trade positive to stay in it. Now, where would be a logical place to tell me that they were still selling it? Right here. If it came back down through the low of the day, I'd get out of it. AMRS. What is your buy point? Well, I probably wouldn't have seen it until I did the scans tonight. So my buy point is seeing it open positive tomorrow. Do you use the top of the shadows or the top of the body as your buy points? Remember, the important factor of candlestick analysis is the two important decisions. Where did they open it and where did they close it? So if they open this positive, meaning from where they closed it, that's your positive open. Now where am I? RG and X. All these series of dojis tells you lots of indecision. What's this tell you? They've made their decision on what they're going to do. So this one you'd be buying on positive trading, meaning if it opens positive and starts trading positive, more than likely you've got a 45 degree in progress. 45 degrees is just going to be kind of a steady uptrend. And VKTX. There's your fry pan bottom breakout. So what's our expectation here? More upside. I don't know whether this is still around or not. Nope, I guess that one's gone. All right, the same thing works on the bearish side. Tupperware. You can see the slow curve. You can see the left-right combo. You can see that it did not support at this level. So what do we got? A wave 1, wave 2, wave 3. Could be the same magnitude as this one or that move. STX. There's your left-right combo. Closed right on the 200. So what's that tell you? That might be acting as a support level. So if this one opens lower tomorrow, you can start shorting it because it's telling you the 200 is not going to act as support. Where's your next logical target? Probably down in this trajectory. There's your left-right combo, bearish doji sandwich, gap down. This is what you're looking for. This is a setup for a high probability down move. Again, this is the opposite of your fry pan bottom. This is kind of your dumpling top. And what's our probabilities when they're closing below the T-line? You've got an extremely high probability they're going to be moving in that direction. Netties. Wave 1. Again, notice where it gapped down. After a shooting star, closed below the T-line, below the 50. Where was the buying starting? Where do most people sell? They panic sell at the bottom. So when you see a gap down doji in the oversold area, you start getting ready to take profits. Where's your first likely target? Back up here to the T-line. Now notice what you had, a little doji gap down. So if they start trading this lower, what do you got going on? A bearish J-hook pattern that tells you this wave right here should be the same magnitude as this wave. So SS, you're going to have to click on your red X. Jim, can you help SS get off the stuck screen? RES, another. You can see kind of the little support level, doji gap down. Another one that you could be shorting, looking for much lower. How many shorts versus long do you have in the portfolio? Well, Jim, with the market moving over, this is kind of a natural evolution. If I was long, let's say I was 8 long and 2 shorts. Well, if this opens lower tomorrow, I might have closed out 2 longs, and I might be putting on 2 more shorts. Now I'll be 6 long, 4 shorts. If it closes below the T-line, I might close out a couple more longs and add a couple more shorts. So it's kind of a natural evolution. Now, with scanning, you're always going to be able to find way more positions than you're ever going to be able to handle. So if I can see the market is rolling over, oh, come on, there we go. If the market is rolling over and starting to head down, I'll start adding or closing out long positions and adding more short positions. So I'm never going to be 10 short or 10 long. I'm usually going to have a combination. And when it gets to a bottom area, let's say this was the market and started coming back up, I'm covering short positions and starting to add long positions again. If we are trading after the candlestick has happened, aren't we late to the game to enter an option trade? No. The candlestick signals are the reasons that you're going to put on those trades. Not anticipating what's happening, but seeing what's happening and then taking advantage of that next move. So in this case, what did we just do? In this case right here, I might have started adding some puts with the anticipation of this. Or even if I didn't put my puts on here, I might be putting on puts tomorrow because I know wave 1, wave 2, what my next expectation is. Is the market rolling over? That's what we'll have to find out, Sam. We'll have to see whether they take it down below the T-line tomorrow. Often when you have a big kicker signal following a doji as an AMRS, the next day will be profit taking. So do you wait until the next day or 2 when the profit taking is done, or move in or buy if trading down no more than 1/2 way down the big candle? Gail, today we were going to short box. But the criteria was, after this big kicker signal to the downside, that we wanted to short below this level. That would tell us the sellers were there. Well, when they opened up positive and traded positive, that told us they were popping it back up. It wasn't time to short. So when's the time to short? When it comes back down here through the 200, telling us the profit taking on the short side is over and the continued selling. So, again, Beastie, Best Inc. You didn't miss it yet because this was the signal today. So where's your next likely price move? At least probably coming down here to test the bottom of this channel. So the signal is telling you which way it's going. Then you take advantage of knowing that. You're not trying to anticipate. You're analyzing what the chart is telling you and then knowing what should happen afterwards. Bison. Where was the obvious failure? Right here at the 50. This is what we call a blue ice failure. Notice how when it fell through the ice, came down and they came back up to try to find the hole they fell through, got back up here and failed. Where do you think the next target is? Back down here to the 200. That's just a high probability trade setup. We've been long yaks until today. Notice what was happening up here. Doji, doji, good distance away from the T-line in the overbought area. There was your safety stop. Now you've got an evening star signal. You can be ready to short this one on weakness because where's your first target? Maybe down here. What are your targets? Well, you can use everything that everybody else can anticipate what they're using. If it's Fibonacci retracement numbers, you start from the bottom and you go to the top. All right? Our targets could be here, 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 or here. We don't know where it's going to be. All we're doing is watching to see where there might be a buy signal, and we know that's where people have started stepping back in. So right now, we don't know what the market's going to do. Now, obviously, today's selling was profit-taking at a time when there should be some profit-taking, and it was instigated by the announcement that they were going to put $200 billion of tariffs on China. That was the reason they started selling off. So right now, we know what should happen in the market. If it starts trading lower, especially if the NASDAQ comes down through the 3T line and the low of the doji, they're more than likely profit taking back to the T line. At that point, you see whether it bounces back up and they continue the uptrend or they continue further down. Okay. Oh, I know what it was. So we're going to be doing a lot of training over the next 2 months on Tuesday and Wednesday nights with option strategies and entry and exit strategies, scanning. Oh, Becky, what have I done? Can you put the link in? If you're new to the Candlestick Forum, as soon as I can get the link in, we're giving everybody a free week of participating in the chat rooms and checking out what. There we go. Is that the right spelling? With a K on the end of it? No. I don't know where that K came from. So, yeah, we're giving everybody a week. You can use it any time. There you go. All right. Amazon is the only stock that doesn't care what the market is doing. It marches to its own drummer. Yeah, but there will always be profit taking. So that's why you always want to see what's going on. So logic says if it comes back down through today's low, they're more than likely doing some profit taking lower. Okay, with that, I am new. How do I find all these stocks? Very simple scanning techniques, Mike. Once you set up your scans, if you don't know what you're doing, you'll find excellent trades in less than 20 minutes each day. You can get it down to the point where I can usually find the best trades each day in less than 10 minutes. So the scanning process is very simple. Any candlestick signal that you can visually, or not visually, orally explain or dictate, you can write a formula for. And so all the formulas are already already built into a lot of these software programs. Yeah, so we use TC2000. We also use Metastock. I think there's the scanning for Think or Swim, for whatchamacallit, Trader. I forgot. Trade Station, thank you. So, all right. Any other general questions on candlesticks? I use TC2000 only because I've been using it for 15 years. Thanks, Sam. When you see a good buy signal, decide to take a position. You use a market buy or limit. I always use market. If it's time for me to buy and I can see that it's moving up, it doesn't matter whether I buy something at $23.10 or $23.14. If I'm looking to buy it, it's because I think there's at least a 10% move in there or upside potential. I hope you'll consider a free week to try the options room too. We could do that, CB. I'll have to talk with Pat. Yeah, TC2000 is a Warden Brothers software, scanning software. Joe, if you go to our website, www.candlestickforum.com, go over to the left-hand column and you'll find TC2000. Click on that and that will give you, it's Warden Brothers. Pat is my marketing person. All right, I guess with that, just do one stock since we're late tonight. So Jim, go ahead and do the double line. Jim, the double line. Jim, you have fallen asleep. Okay. Is that's a nice little wedge breakout or a slow curve breakout. Stay long on that one, Kathy. EXPE, nothing. You can see it's stuck in this downward trend. It needed to break out today. If you happen to be long, it has to stay above the T line and it has to break out through here. If it trades lower, I'd close it out. Southwest, another one that has to open positive and stay above the T line. If it opens lower, you close it out. Netflix held up well, but it has to open positive also. If the market opens lower and they start bringing this down, it's telling you the 50 is going to be too strong resistance level for them to get through. SYY, you should have been out of this one. As a matter of fact, you can think about going short on this one. Notice your kicker signal and your bearish doji sandwich. If this one opens lower, I'd be shorting it. INSEE, yeah, it shouldn't come back down to this level. I would anticipate a 45-degree off of here. AUPH, boy, I don't know whether you can short this one. I don't know what the volume is. I probably wouldn't short it. You're probably in a whipsaw action coming out of a fry pan bottom. And VCell, it's going to move in the direction how they open this one tomorrow. Amazon, if it opens lower, you probably want to take profits. They're more than likely coming back to the T-line area. Sale, you've got a dark cloud. You got indecision here. You don't want to see this one open lower. If it does, you've lost your bullish trajectory. You want to close it out. And Molson's, nothing there to get excited about. You're in a big wedge formation. I wouldn't be long or short this one right now. Square. Stay long, but notice where you are. You're starting to move a good distance away above the T-line in the overbought area after a big uptrend. Your safety stop should be at today's open. If it starts trading up further tomorrow, that's when you start flipping to your 10-minute chart and getting ready to take profits. FedEx, nothing here anymore. We were long FedEx, but it's just now a very slow uptrend. I wouldn't be long or short this one. eBay is having a hard time. If you're long, you can stay long. Just don't let it close below the T-line, and obviously you need to see this one get up through the 50 because of the fry pan bottom. Western Digital, if you're short, you stay short. If you're thinking of going short, be ready to short this one on weakness tomorrow because that would be a wave 1, wave 2, a Barry's Doji sandwich taking you into wave 3. SS. Are you thinking of Con? This coming out of a fry pan bottom, you can still be buying this one on positive trading. Riot needs to get back up above the 50. If it closes below the T-line, you close it out. Telling you the 50 is acting as a resistance level. Bud Z is not coming up. Cody. That's telling you if they open this lower, they're bringing it back to the T-line. Notice where it failed, right here at the 50. So here's a very easy training illustration. If they gap something up and it hits a resistance level on a big move, flip to your 10-minute chart right away to see if they're going to be able to go through that level. Right now, if this one opened lower, I'd close it out. It's obviously having a hard time getting through the 50. And Lulu has to open positive to stay in this one. If this opens lower and trades lower, you can see how the selling has started and you've lost the upward trajectory on this one. Tandem, this was just kind of a steady eddy if I remember correctly. Yep. However, you're up here in the overbought area. Stay long. Just have your safety stop below the T-line. Baba was kind of, I wouldn't be long or short Baba. There's just not enough direction there. There's better shorts than that one. NTRA has to open positive. If it opens lower, your evening star signal is still in effect. You want to be out of that trade. Goldman. Well, we're starting to get soggy here. Goldman is not anything that I'd be real long. Probably wouldn't be long or short this one. That's just not a good chart. Notice when it did hit the 200, it's failed. That one's not a good trading one. I'd be someplace else. And Caterpillar, another one that's not a good trading chart. That's just absolutely sideways. Walmart, you got a J-hook pattern setting up. If you're long, Walmart's not a great trader either because of the amount of stock that's out there. It has a hard time moving around. But if you like it, you stay long as it stays above the T-line. NVTA, a doji up here in the overbought area away from the T-line. Set your stop just below today's low. If it comes down through there, it's going to be moving in the direction of how they open after a doji. Right, coming back to the T-line. XOP, you stay long. ALGN. Another one where you can stay long, but you can see you got a little bit of resistance up here. If you're long, put your safety stop right here. If they come back down through there, they've failed up here. Notice every time they've taken it up, the bulls or the bears have knocked it back down. That's what the tails kind of indicate, is your weakness to the upside. Not yet on NVIDIA. If it starts coming back, it's still in an uptrend until it breaks that it's up 872 after hours. All right, so you just stay long on that one. On Lulu, okay. Let's see, HRB, is that H&R Block? Kind of a J-hook type pattern. Notice how they supported off the 34 and the 200. I would still anticipate you're in this steady uptrend trajectory. Okay, yeah, if you're new to the candlestick forum, yeah, use that week of free entry into the chat rooms and the picks. Remember, candlestick analysis is just merely common sense of what happens over and over in human nature. I always tell people prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.